candidate speaking out on the economy and how they'd fix it.
The catalyst of this crisis was the collapse of the housing in America. And I want homeowners to be able to negotiate a new mortgage at the new value of their home so they can stay in their homes.
I've already proposed a middle-class tax cut for 95% of workers and their families. But today I'm calling on Congress to pass a plan so that the IRS will mail out the first round of those tax cuts as soon as possible.
Senator Obama also proposing a new tax credit for small businesses that create jobs, a 3-month halt in home foreclosures, and a chance for people to take up to $10,000 from their 401k and IRA accounts without taxes or penalties. Today, there were no new specifics yet from the McCain camp. They are expected to unveil a new economic plan tomorrow. We'll have more on the politics shortly. But first, the money and the breaking news in Ali Velshi. Ali, a lot of Americans, no doubt, lawmakers must be revealed with this major comeback on Wall Street.
Yeah, and look, it's not a trend, it's just a day. But let me tell you a little bit about how this day started off. On Friday night, we had a loss of 198 points, but a lot of people thought that was really almost a gain. Part of the loss there was because the price of oil had gone down, and Exxon and Chevron brought the market down. So take a look at how today went. It was up more than 500 points for most of the day, then 600 points, and then in that last hour, something technical happened. It's called a short squeeze. It's people who are betting against the market, realizing that those stocks weren't going to go down. You have to buy stocks to make up for it. So that's what happened. We've never seen numbers like this. 936 points higher by the end of the day. Until today, the biggest number that we'd ever seen wasn't even a 500-point gain. Now, there were a lot of things that happened. In Europe, the banks decided that the governments decided they were going to back up the banks. The U.S. sort of gave off hints that it was going to start spending the $700 billion soon and maybe emulate the British model of guaranteeing bank loans. So that was another big deal. A lot of these things led to this kind of market charge that we had today, but we're not even halfway made up for what we lost over the last couple of weeks, Anderson.
Ali, we're learning more details about what the government's going to announce tomorrow. What are you hearing?
There are 4 basic things that we're hearing about. Let me show you what they are. The first one is that the government seems to be targeting 9 specific banks that they're going to make direct investments in. They're going to invest in those banks, and they're going to get stocks back in return. The second thing is the Treasury's been authorized to spend the first $250 billion of the $700 billion bailout. Well, the president is going to give them authority to spend another $100 billion so that they can accelerate the pace at which they're buying up these troubled assets and investing in the banks. The third thing is we're going to get the rules on CEO compensation. As you know, that bailout package had some provisions that if your company gets help from the government, from taxpayers, well, your CEOs aren't going to be able to walk away with golden parachutes or get too much money. We're going to get details on that tomorrow morning. And finally, the FDIC, the Federal Deposit Insurance Corporation, which insures your bank accounts now up to $250,000 apiece, is apparently going to start insuring non-interest-bearing accounts, the kind out of which people's payrolls are paid. So that's a pretty important thing for all those people who are worried that this credit crisis could affect their payroll, Anderson. We're hearing news that that could change too.
All right, Ali Velshi, thanks. Again, the Dow up a record 936 points. That's up 11% just today. The question is, what comes next? What happens tomorrow? Some perspective now on where things may be headed and what it means to your bottom line from Fortune Magazine managing editor Andy Serwer. Tomorrow, you said it's going to be an interesting day. What do you mean?
You know, when the flight attendants say keep your seatbelt securely fastened, I mean, there's no question, Anderson, that tomorrow is going to be another one of those days. There's a couple things that happened. First of all, today was a bank holiday, so the credit markets were not open. So we'll get the full response of more developments from Washington. We're also going to be having the President and the Treasury Secretary, as Ali suggested, are going to be announcing more details about the plan, investing directly in banks, also insuring more.
You pointed out to me just before we went on the air that the amount of money that the U.S. government is now going to be putting into banks, which is basically what the Europeans have been doing or announced they're going to be doing, it's minuscule compared to what the Europeans are putting into their own banks.
Well, that's right. I mean,
so
the way the plan is right. Well, the way the plan looks to me is it's $250 billion, perhaps plus an additional $100 billion. The details are still fuzzy, but remember, the Europeans are throwing the long ball here. They're throwing $2.3 trillion at their problem. The economy of Europe is, say, roughly the same size as the U.S. economy, and we're only going to be doing $250 billion. So they're spending 10 times as much as we are. Some people are suggesting that our plan could be overwhelming in that sense.
Well, isn't this something that, this whole idea of injecting money directly into banks, isn't that something that Paulson wrote off a couple weeks ago?
Yeah, in late September, I think it was September 23rd, in fact, there were suggestions that that was not necessary to do at all. And now we've seen the Europeans do it, and here we are doing the European model. For those who suggest that earlier in the year we should have headed this thing off of the pass, you know, that may be a bit of a red herring because no one foresaw exactly how bad this is going to be. You know, this is uncharted territory right now, so maybe it is prudent to keep shifting in terms of what you see as the focus.
There are those who have said, and I think Sines Fareed Zakaria was among them, who said, look, you know, that as painful as this is, and gosh knows it's going to be incredibly painful for some folks more than others, but it's, you know, there's going to be a lot of people hurting out of their work, seeing their savings disappear, but it's a dose of reality in an economy that very badly needed reality. Our economy has been bloated and drunk for a long time on greed and other things, and this is a wake-up call.
Yeah, I think we have too much debt as a nation. Individuals, our government, we're over-leveraged. We borrowed too much, and we're paying the piper right now. I mean, you don't want to say that we need pain, that people all around America need to be thrown out of work. I mean, that's ridiculous. That's crazy. That's horrible. Particularly people who did nothing wrong. I mean, you look at a guy who works in a factory who never borrowed more than his mortgage. He's perfectly safe, perfectly on target, and he loses a job because of this thing. It is true that, you know, we should not be borrowing as much as we had. People shouldn't be floating things in their cars. We're sending so much money overseas to pay for oil and our trade deficit. So it is a wake-up call, but, you know, the pain really hurts people. Job losses, that's the worst.
People looking at the stock market now, they're wondering, should I get in on the stock market now? It's gone up 1,000 points.
Well, you know, the reasons for being in the stock market are the same today as they were on Friday as they were last year, which when the market was 14,000, now it's 9,000. You know, you buy great companies with great profit prospects, hold them. Microsoft, Procter & Gamble, Exxon, these companies are going to be around for a long time. It's true they're cheaper now than they were a year ago, and it's true that they were cheaper on Friday than today. But, you know, this is a great lesson in market timing, right, Anderson? I mean, if you had sold on Friday, you would have looked like a sucker, right?
Right. Trying to time the market, as we've had so many people, Susie Orman and others, telling us it is virtually impossible to do. Andy Serwer, appreciate it. Thank you. So what do you think about the new developments? Talk with Eric and me during a commercial break, also with other viewers right now at ac360.com in our live chat. You can also check out Erica's live webcast during the breaks. Politics now and a new plan for Barack Obama.